Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The blockchain landscape is experiencing unprecedented momentum as regulatory, institutional, and technological forces converge. In the United States, Congress has designated this week as Crypto Week, marking a pivotal moment for digital asset legislation. The House of Representatives is set to debate three landmark bills: the Clarity Act, which aims to establish clear regulatory frameworks distinguishing cryptocurrencies as commodities or securities; the Anti-CBDC Surveillance State Act, designed to block the creation of a central bank digital currency over privacy concerns; and the Genius Act, focused on stablecoin regulation. This legislative push, driven by bipartisan support, reflects a strategic effort to position the U.S. as a global crypto leader. Should these bills pass, they could catalyze institutional adoption by resolving long-standing regulatory ambiguities, potentially attracting traditional financial entities like asset managers and banks that have remained cautious due to compliance risks. Simultaneously, Bitcoin shattered records by surging past $122,000, its market capitalization now exceeding $2.4 trillion and eclipsing Amazon's valuation. This rally stems from robust institutional inflows, with spot Bitcoin ETFs recording $2.72 billion in net inflows last week alone. Corporate treasury adoption is accelerating, exemplified by Japan's Metaplanet accumulating 15,555 BTC. Macroeconomic factors also play a role. Soaring U.S. debt and M2 money supply expansion have fueled Bitcoin's appeal as an inflation hedge. If this trajectory continues, Bitcoin could challenge gold's dominance as a store of value, though volatility remains a concern given its technical overbought signals and substantial liquidations in derivatives markets. Ethereum mirrored this bullish sentiment, breaching $3,000 for the first time since February. The surge coincides with record-breaking staking activity, where 29.5% of ETH's supply, worth over $35 billion, is now locked in staking contracts. This supply squeeze reduces exchange liquidity, amplifying price movements when demand spikes. Technical indicators suggest potential upside toward $3,200, supported by 9 consecutive weeks of institutional ETF inflows. The upcoming Pectra upgrade, enhancing validator efficiency, could further solidify Ethereum's utility. However, ETH's rally faces resistance near $2,950, and a retest of the 2,800 support zone may precede sustained upward movement. NFT markets staged a dramatic comeback, with daily sales volume soaring 400% to $31 million. Bitcoin-based NFTs led this charge, capturing $11 million in trades as collectors prioritized blockchain security and cultural cachet. Ethereum and Polygon also saw significant volume spikes, though Bitcoin's dominance signals a shift in collector preferences. This revival aligns with Bitcoin's price surge, suggesting NFTs are benefiting from broader market optimism. Should this trend persist, it could reignite developer interest in utility-driven NFT projects, moving beyond speculative JPEGs toward integrated gaming and media applications. In decentralized finance, the GMX exploit resolution offered a rare victory for security protocols. After stealing $42 million through a re-entrancy attack, the hacker returned 90% of funds following a 10% white hat bounty offer from GMX developers. This incident underscores the persistent vulnerability of DeFi smart contracts, but also demonstrates how ethical incentives can mitigate losses. While GMX v1 forks remain at risk, the protocol's transparency in publishing a post-mortem may bolster industry-wide security practices. XRP dominated altcoin discussions amid rumors of an imminent ETF launch, potentially on July 18th. Though unconfirmed, pro-Ripple lawyer John Deaton amplified speculation, driving XRP's price toward $3. Regulatory clarity from Ripple's legal battles against the SEC has created fertile ground for such products. An XRP ETF would mark a watershed moment for non-Bitcoin institutional products, though regulatory hurdles remain. Stablecoins gained corporate traction as the Genius Act advances. Companies like Ant Group plan USDC integrations, leveraging stablecoins for cross-border transactions. Regulatory clarity could accelerate this trend, transforming stablecoins into foundational tools for global commerce. Ethereum's Layer-2 ecosystems, including Arbitrum and Optimism, reported surging activity. These networks reduce gas fees and improve scalability, making decentralized applications accessible to mainstream users. This growth reinforces Ethereum's value layer thesis, where L2s drive demand for ETH as collateral. Memecoins defied expectations, with Pengu and Doge notching double-digit gains. Pengu's 28% surge highlights retail traders' appetite for community-driven tokens, though sustainability remains questionable without underlying utility. Market-wide, the crypto capitalization hovered near $3.9 trillion, with 98 of the top 100 tokens gaining. Analysts attribute this to positioning for a major upward leg amid regulatory optimism and institutional conviction. The convergence of these factors, legislation, institutional inflows, and technological maturation, suggests structural bullishness, though macroeconomic risks like US CPI data loom. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.